All right, folks. I have 5 o'clock on the dot, 5 p.m. local time here in Bali. It's time once again for the filter. What is the filter? Well, there's so much going on in crypto that we decided a couple of years ago to get together every week and try and figure it out, like kind of crowdsource the analysis of all the craziness that is this adventure we're on, this crypto adventure. And here we are, 121 episodes. Tonight is the filter number 121, called The Wisdom of Crowds. What are we going to talk about tonight? Well, Bitcoin crashed. That's exciting. Always exciting when Bitcoin crashes. I've been there before. It's happened before. It'll happen again. And Ethereum, well, Ethereum is on the rise, right? Ethereum is going nuts. In fact, have you guys heard of this term called the flippening? The flippening? Yeah, this is where Ethereum flips off Bitcoin. And we're going to try and see if Ethereum can take the mantle, can make Bitcoin the altcoin. What if I told you Bitcoin was the altcoin? This is there was a meme on the group earlier. What group am I talking about? Well, we have a Facebook group, and this is where we hang out when we're not all together in person. This is where we crowdsource the stuff we're going to talk about. And yeah, so if you enjoy what we do tonight, then make sure you take a look at our Facebook page, and I'll give you some more contact information later. What else are we going to talk about tonight? We're going to go around the world a little bit. We're going to go to Spain. Anybody see any interesting news about Spain that's pertinent to crypto? Yes, no, maybe, not? Okay. It has to do with bail-ins. You guys know what a bailout is, right? Yeah. You know what a bail-in is? Yeah. All right. And we're going to go to Japan as well. Also, the Bancor ICO, Bancor, a new coin, the biggest crowd-funded ICO to date, about $300 million. Wow, $300 million. They raised $150 million, but they kept $150 million to themselves. We're going to talk about that. And then we should be able to facilitate a discussion around the wisdom of crowds. What is the wisdom of crowds? Well, the crowds always get it right? The market is always right. If Ethereum is worth, how much is Ethereum worth right now? How much? 36 billion. So if the market thinks that Ethereum is worth 36 billion, then that's the case, right? That's the wisdom of crowds. We're going to leave a little conversation about that if we get the chance. So let me kick things off. I'm going to share my screen with the folks at home. Hey guys at home, welcome. And if you wouldn't mind hitting thumbs up and sharing the feed, we might be able to get a little bit more people watching. I'm just going to share my screen here with the folks at home, and we can see your chat in the Telegram group. So if you want to chime in at home, just chime in on the Telegram group. We can see it up on the main screen. And you guys in the room here, help me keep an eye on that chat on the right. And if anything, if anybody's being more witty and interesting than me at any given moment, please just bring it to my attention. All right, the filter number 121. Let's do this. Let's see here. I think I'm on the wrong spot. All right. Okay. All right. One minute here. There we go. All right, here's the Facebook group. This is where we hang out offline. You go to group/Bitcoins in Bali. This is a closed group where we have an ongoing discussion about the news of the day. And this is where I source most of the stuff that we talk about on Tuesday nights. So if you're not already a member, get in there. All right, Bitcoin, the Bitcoin price. Let's take a look at it on Coindance. This is a new website, relatively new website for me, where there's a bunch of statistics about Bitcoin. Look at the price, $2,674 per Bitcoin. You can see that Bitcoin is down. In the last 7 days, we're down 5%, and just today, we were down 10%. 10% in one day. That's not very good for a currency, the utility of a currency, if it fluctuates 10%. Can you imagine trying to run a business when somebody pays you and then whatever they paid you is worth 10% less at the end of the day? How do you pay your suppliers? How do you pay your employees? How do you make any business decisions if your currency is that volatile? Well, we're just not there yet. We're just not there yet with Bitcoin. Wow, if you take a look at this over time, it's a different picture. But on any given day, like today, we're down 10%. So that's an interesting thing to consider. What else have we got here on the Coindance statistics? Let's see. We've got 7,000 Bitcoin nodes. Bitcoin search volume is well, a lot of people searching for Bitcoin. I know what I wanted to show you guys. Check this out. Where is it? Bitcoin male to female ratio. Are we beating the ratio in this room here? This little pink section, that's the women in Bitcoin, and this blue section is all of the dudes. It's a little bit dude heavy. I think we're worse. I think this is this is not a very healthy metric for Bitcoin. Forget about volatility, man. We've got no sexual equality in the Bitcoin world.
How do they whip that out?
Chart is not politically correct. There's no LGBTQ.
What's that?
No LGBTQ in the chart.
Oh yeah. There's no. Well, there's a very slight line. You can't see it. It's right there.
This is Google visits to this website. Is it how they figure it out?
Maybe so. I don't know. Anyway, that's a little bit about Bitcoin, the Bitcoin price. What else we got here? It made the news. Bitcoin's price crashed $400 in a matter of hours. How does this happen? Hey, Luigi, come on in. Bitcoin. This is how many people like you wake up in the morning and then you just roll over and lift your phone.
Yeah.
Right. And then you see a headline like this. It's a good way to start the day. The Bitcoin price crash. Anybody have any idea why the price crashed?
Yeah, because it essentially hit what was it, 4,000? What was the high on that?
3,000?
Sorry, it hit 3,000, so it probably triggered a lot of sales from day traders, I imagine.
Yeah, there's what they postulate in this story is that there were a lot of contracts that came due because of the upward push. People were exercising contracts. Here's this. Whale Calls is an automated Twitter feed that analyzes futures contracts for Bitcoin. Let's see. This isn't the first or last time opaque coins liquidation has caused massive movements in the market. That is an inherent problem with margin trading. At some point, the liquidations hit and create unsustainable pressure on the market, causing it to correct. All right, so
that was the only explanation they gave. It was manipulated because of futures contracts.
That's what they're talking about. But I mean, there's also other mitigating things going on in the world, right? I mean, we've got this ongoing scaling problem. We've got lots and lots of Ethereum in the news and Ethereum on the rise. And if you get a little bit of momentum in one direction, you get the stampede effect. That's also the wisdom of crowds, right? You get a stampede or a fear of missing out. Or fear-based exit. This is where the term HODL came from, right? You guys seen this this misspelled word hold, HODL? Have you seen this? Whenever Bitcoin crashes, you'll see this word pop up, HODL, HODL, which is the first time Bitcoin crashed. somebody was on Reddit and he was typing so frantically that he typed HODL instead of HOLD and it stuck. So now whenever Bitcoin crashes, you'll see people saying "hold." So anyway, this was the crash. $400. That's a lot of money. That's well, Ethereum is about $400 right now, right?
Yeah.
So a
really
$400 move. You can see the difference in scale between Bitcoin and Ethereum because Bitcoin can move $400 and Ethereum in total is worth $400. So
It's not really a crash, eh? It's called a consolidation, and it wasn't that big of a move. If you go back in the charts just a few weeks ago, we went bigger.
we went
It was
bigger
way
percentage
bigger.
wise.
And that was the consolidation because it already gone up so fast.
Mhm.
So fake news.
So like when you get a crash, you're talking about a long-term decline, and usually it's 40% or more.
Right.
Sometimes 70.
And well, yeah, we saw in 2013 when we peaked at 1250, something like that, and we had a crash down to the 200s, 180, I think,
Yeah,
and it spent 3 or 4 years coming back to life.
Was that a one-day crash, or did that take place over time?
It was quite steep, but I don't know if
it went. Let's look at it. It
From
dropped a
December
lot
100.
in a matter of days, but it took a long time to find its bottom. It went from on this market Bitstamp. It went from 1150 down to 387 in a matter of weeks. In a matter of days, it went down to 555. So it went to half.
right in a matter of days.
Yeah.
Right. And this was after a precipitous rise. And this is the nature of bubbles in any market. If you've got a precipitous rise, then if things change too quickly, if the slope of the curve of the growth is too steep, then you get corrections, right? People take profits. There gets to be a stampede towards the door, and it doesn't matter if you're talking about hog futures or Bitcoin or Ethereum. This is the nature of markets, and that's how they behave on occasion. All right, let's talk about volatility. This was posted in the group, and this is interesting. I don't know if, Will, you want to comment on this. This is Will's graph, and just for the sake of the people who haven't seen it before, I'll describe it a little bit. This is Bitcoin's 60-day trailing volatility, right? And right now it's sitting in double digits, 17.6%. This red line that's going up and down here, that's the 60-day volatility, and you can see we're way up here at the moment. Now this trend line is that the average or the mean of the trend of volatility? You can see it goes up and down on either side of this trend line, but this is the trend in volatility right through here. And then the size of these bubbles is the amount of Bitcoin being traded. So you can see that the amount of Bitcoin being traded is growing and growing, and at the same time the volatility is going down and down. And you can see Will has drawn this trend line, but he's also put another trend line along the peaks of these volatility spikes in order to judge at what time, because this is along the x-axis, this is a time, and we're trying to figure out when Bitcoin volatility will rival fiat currencies. And along the bottom here, you've got the Euro USD cross in dark blue and the Euro New Zealand dollar cross. So in order for, like we just talked about, Bitcoin had 10% volatility in one day. That really makes it not very useful as money. But when it gets down to the volatility level that rivals, say, the euro or the New Zealand dollar or the dollar, then we'll be in a different environment altogether. Did I miss anything, Will?
Oh, you got it.
Well,
It's actually almost 20%. It's slightly delayed on that.
Oh, really?
Yeah.
Well, what's interesting is you can see that this line has escaped Will's channel here. He's got this green line here where he's thinking that's defining the trend, and this thing has broken out of his trend line. So he drew another one.
So we slip back into speculation.
He drew another trend line
Yes.
to kind of accommodate this.
It's a better. That's what a trader would do. They would find the peaks. But I did it numerically. That light green one, that was picking the peaks and then running like a regression.
Yeah.
Okay.
On it, but that would be what I traded through.
This is like an eyeball, right? But this
Yeah.
one is based on math. This one is
Yeah.
an eyeball. Because you can see that's pushing us way out to like 2026 almost to have volatility down here.
Yeah, totally.
Yeah.
So
All right, enough about Bitcoin. Bitcoin is old news, man. Bitcoin. Who cares about Bitcoin? What about Ethereum? What about the flippening? The flippening,
lighting up. Hey.
where Ethereum flips off Bitcoin. Here's a website called flippening.watch. Is it me? I'm old that I don't like the non.com URL like .watch. What the hell? What's that? I'm feeling grumpy. I'm feeling grumpy about .network and .watch. Anyway, this is flippening.watch. Check out all these cool metrics. Market cap, Ethereum is at 36 billion, Bitcoin's at 44 billion. That means it's at 81.4% of Bitcoin's figure, right? So we're almost there, 36 billion, 44 billion. This Bitcoin used to be the 800-pound gorilla, right? It used to be 20 times the size of Ethereum, 20x. Now Ethereum is what, 81% of the market cap of Bitcoin. Now, just a few months ago, this figure was a lot lower, right? 5-6 billion, something like that. 500 million earlier this year. So does anybody know?
Earlier this year, Ethereum.
That's $5.
Oh, okay.
Okay, so question, does that mean that the world invested $35.5 billion in Ethereum? That mean that much money flowed into Ethereum? Like there was $35 billion out in the world and it came into Ethereum? Is that what that means?
No.
And
It could be more technically.
it could be more than 35 billion? How does that work?
Well, you add up all the tokens, right?
Uh-huh.
And
Oh,
then-
you mean the ICOs?
Well, you add up the number of tokens that is in the supply, and then you find the amount of dollar equivalent at the last traded price. So, say everyone poured in their money, and it all added up to $100 billion, and the last traded price was really low, then your market cap will reflect that. Does that make sense?
I went to college.
Say there's I don't know 100 Ethereum's like 100 stones, and everyone's going, I want to buy that for $100.
Uh-huh.
Bang, 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 bang. So everyone's put in 100 times 100. That's like $10,000, right? And then say no one's trading, and you and I say, I'll buy your token for $1. That would make the market cap of Ethereum $100,
Yeah.
even though everybody put in $10,000 into it.
Okay.
Right.
It's the
So then
last
you
value.
could, it could sway. It doesn't mean anything.
Well, the reason I asked that question is because it feels to me like it's a little bit counterintuitive, right? It feels like there's that much money, and it could be, like Will said, more, but it could also probably more likely be a lot less.
Usually less.
Yeah, and especially when you're thinking about Bitcoin and Ethereum, there's a very small number of tokens, both for Bitcoin and Ethereum, that actually get traded, and so that can push the market, the individual price, and then the market cap for the whole coin all over the place, and it's not necessarily tens of billions of dollars that's transacting, so it's a little bit misleading. All right, what other metrics do we have here? We've got a number of transactions. I was surprised to see that Ethereum has had more transactions than Bitcoin, 109%. So there's more transactions happening on Ethereum than Bitcoin. I suppose it's a little bit hard to compare because Ethereum is trading tokens whenever there's some sort of execution of a contract, right? Or some sort of logical state change in the virtual machine. So, and I guess there's a transaction taking place, but
So Ethereum's a platform for tokens. So you've got how many? Who knows? There's like 100 different tokens, ERC20 tokens. So every time you transact, like say I send a Golem token, which is on Ethereum, that's an Ethereum transaction.
Okay.
So
So all of
you-
these,
This is deceptive.
Yeah, so you've got like 100 tokens. You're multiplying the transaction rate by 100. It's not Ethereum being sent. It's
right,
all the
so,
tokens on it.
gotcha.
So is this market cap considering all of the other tokens as well? Or is it just the Ethereum?
Indirectly, yes, because if all these other tokens are most of them are raising the ICO rounds
In
in
Ethereum.
Ethereum. So you've got to buy Ethereum to then buy into the ICO, and usually the team that receives the money for the ICO lock it up. So it reduces the supply of Ethereum, and that pushes the market cap up.
Right, that's a very interesting point. In case, I don't know if everyone picked that up, but it's whenever somebody creates a new token, they're actually tying up Ether in that process, which means there is fewer Ethereum tokens in circulation, which means it drives the price up if demand remains constant. So
Is it
question.
typically equal like the Bancor contract where it's 50% that's being tied up, or is it sometimes less, sometimes more?
It's an arbitrary decision.
It's markets. It's whatever. Yeah.
So we don't know how much is tied up right now then?
Do we? I suppose someone could figure out exactly how much Ether, because all the contracts are, you can see them all. So, and you can see how much Ether is tied up in every contract, and you also know the total supply of Ether. So, yeah, you could tell. I don't know if you always know how much Ether is on all of the markets at any given time, but
then there's also the way with tokens, the column gets higher in value, it'll affect the overall Ether price as well, yeah? Ethereum price.
No, once it's traded, it's done.
So,
yeah, I don't know. The value of a
because the
token.
tokens, I mean, if people are gonna cash in their tokens or whatever, they're gonna go back to Ethereum.
Yeah,
Well,
actually,
I could sell my golem for Bitcoin, right, on an exchange,
You can't,
and
okay.
it doesn't cross over to Ethereum.
When you say contracts, are you referring to smart contracts?
yes, yeah, Ethereum smart contracts.
When if I fund an ICO, does that get locked up in a contract? That was only because of the DAO, was it? Like, I mean, I can just give Bitcoin to an ICO, right? And that's not going into a contract, aren't you just buying Ethereum and it goes into someone's wallet?
That's a good question. I don't know. I mean, I suppose it's how you set up the smart contract, right? You could have it go into your own wallet, or it could be tied up and subject to some sort of automated governance.
Yeah.
But I don't know what the best practices are around that.
Because that would mean that the lockup of these tokens would be arbitrary. It's like the team that got the money, got the Ethereum, will hold it to fund their team, or they might sell it for Bitcoin.
Yeah,
So
sure. Okay, what else have we got here? Mining reward. Is anybody familiar with how Ethereum's mining rewards work? Are they?
it's proof of work, right?
It's proof of work. Yes. And I don't know. Actually, don't know what this figure is referring to. Oh, 24 hours. So in 24 hours.
That's the new supply that was mined in US dollar equivalent.
So in a 24-hour period, we had 4 million worth of Bitcoin and 10 million worth of Ethereum mined.
It's really profitable.
I'm curious, you mentioned contracts several times. I get the impression that the contracts are really driving the price of Ethereum significantly. Is that correct?
Well, there are smart contracts for these initial coin offerings. And actually, I think everything in Ethereum is technically referred to as a contract. So when you have an Ethereum address, even if you're just trading Ethereum back and forth, like it's, I think they refer to it as a contract. But contracts can have a logic built in, and they can also tie up funds and disperse funds based on logic.
Yes, right.
So that's what I'm referring to when I say smart contract. Question?
What happened last week? You mentioned the $60 million missing Ethereum transaction.
Yeah. I don't.
What happened with that?
There was the Quadriga exchange in Vancouver, Canada, had money tied up in a smart contract, and then I think the Ethereum virtual machine upgraded or something made this old contract invalid, and they had $16 million tied up in a contract that they couldn't get out. And I think that those guys are high and dry. I haven't heard any resolution to that. And it would have required a hard fork of Ethereum, and I think their hard forking days are over. They're trying to establish their credibility again after the DAO fork. And I think they're going to leave these guys out to dry.
So who is his fault?
They are. They're coded. One of their coders, if I'm not mistaken.
What was this?
Yes, any coders in the room want to go
No,
into the
Quadriga.
business of smart contract signing?
Why is that?
Yeah.
Why
Um,
is that their coders fault? Didn't it only happen because there was an
I
upgrade?
suppose it'll be a bad day when you
Yeah,
lose
but
$60
they
million
can't.
or $16 million.
They wouldn't be able to get another hard fork just for that small amount of money.
No, I mean, but like, so when he made the contract, it wasn't gonna work at all, or it only stopped working once they upgraded?
It stopped working once they upgraded.
So, but like, how could he predict the upgrade?
It happens on a schedule, and they probably sent out a warning. But you have to understand the ramifications of your code vis-a-vis any upgrade, and I think it's probably a difficult.
That's hard to do. So,
Yeah.
Because what if it gets announced after the contract is made?
So what the
Yeah, which is the case.
there was
Really?
a
Yeah.
network
Yeah, because
upgrade
they had
hard fork that
the
screwed old
contract
code
was
that
running
wasn't
for
compatible.
longer than the.
That's my understanding, without knowing more of the
Should have
specifics.
moved it to
But
a different hot wall.
But this is
After
another
they make the
aspect.
upgrade announcement, they can like still change the contract, or no, it's set.
Changes you need before the upgrade. If you don't-
Before the door closes.
Oh, okay.
So the lesson is to have the contract terminate before the upgrade.
Maybe.
This is a fundamental problem with Ethereum, right?
It's a big question.
It's like
Yeah.
hard fork is meaning backward incompatible upgrade, whereas soft fork is compatible to past code, right? So if Ethereum is this platform we're all developing on, and you're basically changing the OS, that means every app running on it, whenever they change the OS, has to update their code, or you lose money. It seems like
Or you potentially lose money. Yeah.
you lose a lot of network effect, right? Of like adoption of new projects, because then you've got this overhead of expense because your platforms are moving sands.
Can I ask a question, please?
Yeah.
The Singapore government has just said that they're going to put their fiat currency on Ethereum. So how, would that be an ICO or a smart contract, or what would they do there?
I didn't read the article very deeply, but I believe what they're doing is they're taking the entire code base of Ethereum and making their own copy of it and running. So they're taking the software and running another network that they're using themselves. Something like that. I didn't read it very deeply.
So it'll be par value, like they'll control the value of the tokens in that network to be the same as the Singapore currency as they have it. So it won't fluctuate on an open market like Ethereum does.
So they get the blueprints of Ethereum and then they build their own car and tweak it a bit.
They want to have control over it. So mistakes like this, or they can.
But this is pretty cutting edge. I don't think any of us really know what all of the ramifications will be. I mean, it could just be that they want a few headlines and they want to get kind of on the bandwagon, and it's not that significant. Or maybe it's a true innovation, but we'll have to see what unfolds.
But this $6 million fuck up is a question of trust into the system, the belief into the system. It can,
Well, yeah. I mean, it's.
the fact that I haven't heard that much about it other than from that one time, it's kind of strange. It seems, in terms of obviously the market cap, 16 million doesn't seem like a lot, but I thought we should have money to be used in that.
Well, I would postulate that the vast majority of Ethereum investors aren't aware of the potential problems. We'll just have to see what happens. But it would seem to me that would affect the market price more than it did. So I don't think it's fully appreciated.
But I think an exchange would be aware, though.
Yeah, but exchanges want people to trade with you.
Do you think they'd be aware that there's going to be these updates and things? Like, if anyone was going to be ready for these kind of things, Yeah, you would think so. You would think so. And I use them. They're pretty spot on in my experience, but I haven't traded Ethereum. I just traded Bitcoin.
I think that was probably a bad day at the office for
But
somebody.
they didn't go bankrupt. So I have an account with them too.
Korea.
Yeah.
What was the name of the firm that lost the 6 million?
Quadriga, 16 million.
16. Yeah, Quadriga CX.
And it was one developer. There.
Yeah.
Do you think?
Yeah.
Is he still working there?
I'm sure somebody doxed that poor guy. All right, so let's
Quadriga.
we've been talking about the flippening, so let's take a look at, let's try and put this thing in perspective, all right? Here are search terms for Bitcoin. And you can see we're at an ATH for searching for Bitcoin over time, right? Even way back in 2013 when we had the last, crazy period where it was first on CNBC and we were on in the Wall Street Journal, et cetera, we've eclipsed that in terms of Google searches. So how many people are getting phone calls from their relatives and friends like, hey, what about that Bitcoin thing you told me about? Like, hey, I'm ready to learn now. I'm ready to learn. So this is what people are now, because we're running in these circles. I think we all feel like there's a cacophony of Ethereum, right? Bitcoin's over and it's Ethereum. But what does the world at large think, right? So let's do a little comparison here. And granted, this is hard to spell.
That's probably one of the reasons. It's nice catchy.
They're all going to the misspelling.
The flipping, is that a play off words off of the Hubud, the joke about Bitcoin and Ethereum switching their dominance?
It could, yeah. Basically, they're saying that Bitcoin will become the altcoin, and Ethereum will dominate.
Can you compare it to Ethereum spelled with an I on the third one?
What's that?
The third E.
There
With an I and I compare it.
They should have all.
And can you try that again with US filtering rather than global?
Okay, let's see.
Everybody has
Yeah.
different.
Yeah, because I'm wondering if it's Western countries versus.
So you want me to just do United States?
So how do they write
Yeah,
Ethereum in there?
US type units.
United States. There you go. It's closer, right?
Closer. Yeah, you're right. It's closer.
It's
Interesting.
actually very close, eh? With the Bitcoin dip and Ethereum's going up.
Yeah, this could be a flippening type of
It's
happening here.
it's Western investors.
But just for fun.
That's true.
That's spelled wrong.
So we want to judge the consciousness.
No
way.
It's
spelled wrong.
Yeah, yes.
Oh, yeah, I
I
did.
don't know how to spell this.
I'm proud of the
Maybe
fact
should
that I
have
got
fixed that.
that.
There you go. It's helping you.
Thanks, Google. Thanks for helping me. They're at least at
Oh, he's overtaken.
That's ridiculous.
But that was United States.
What
Go
happened
global.
on that
Go
one
global.
day?
Go global.
Look at that.
What happened on that one?
Probably when he went to jail.
Jesse Eaters on the
He was in jail?
Or
wait till
arrested.
the
He got
report
arrested.
comes out. Yeah. So Justin
Yeah,
report.
no, that was just
Global,
a very
pretty
short
much.
cross.
Okay, so that gives you a
Well,
little
he's
bit.
trading down.
All right, so me being the Ethereum troll that I am, I posted this article from Whale Panda. I was wrong about Ethereum. I was wrong about Ethereum because it's such a good store of value. No, wait, let me try again. I was wrong about Ethereum because it was decentralized. Nope. I
Such a
was wrong
troll
about Ethereum
article.
because everyone is using it as a supercomputer. No. Okay. So anyway, it's a little bit of a tongue-in-cheek, and but it's something that I think we talked about last week is what is the real utility of Ethereum? All these people that are investing in Ethereum, what are they going to use it for eventually, right? What is the utility? What's going to be that thing where I have to get some Ethereum so that I can do X, Y, Z, right? And at the moment, it appears to be for ICOs.
Yeah, just a platform ICOs.
Right. So it's a very easy way. We had for the longest time we had altcoins, right? So you take the Bitcoin code, and then you run it on your own server, and all of a sudden I've got Gary coin, right, or Jeep coin. And Ethereum made the whole process much, much easier so that instead of running your own code on your own server, you could use the Ethereum platform to basically you've got a little template, the ERC20 token template that allows you to make your own token. And people are doing their initial coin offerings on top of the Ethereum system. So Golem is like that. Gnosis is like that. Anybody have any other tokens that they happen to know use the ERC20 standard?
Bancor.
Bancor.
ICOs is the acronym for.
Initial coin offering.
It's like an IPO,
Oh,
except it's a ICO. Okay, so and that's really the point of this article is what is Ethereum really good for? Is it going to be useful for something more than an ICO or this ERC20 standard? And is it does it just come down to greed? Because as Willie and I were mentioning just a few minutes ago, when you need Ethereum to do your ICO, then it creates demand for Ethereum, right? So this is actually an answer to that question I just posed. Like, what do you need to get Ether for? Like, what's that thing that you're going to have to go and get some Ether for in order to do something? Well, if you wanted in on Bancor, then you had to go buy some Ether, right? So it generates the demand. But when Ethereum is tied up in a Bancor ICO, then the supply is not as great, and so if there's continuous demand and less supply on the market, then the price goes up. So it's a little bit hard to tell how much this ICO craze is driving the Ethereum price.
The question regarding Ethereum, the use cases are different, at least for developers. They're using Ether to provide development of some of the apps that are currently there. What is there visibility over what percentage of use case would regard to that as opposed to post speculations over?
I think it's quite small, but
it is really a slow amount of gas, and you can track it. It's proportional to the transactions, really.
Personally, I'm wondering if the most interesting applications of Ethereum are yet to be developed around smart contracts. And I had this vision of this site, this distributed platform where you can hire people for different contracts using Ethereum, and instead of just two people, the smart contract basically takes care of the escrow and everything like that. So I think the most interesting things have yet to be developed.
I would agree.
But that's the problem, right? No, the speculation on the price point isn't because of its use yet,
Not yet.
or at least not for that.
I'd even say that the ICO, I'd say the ICO craze is only maybe less than half of the reason why Ethereum's going up.
Oh, really?
Yeah,
Speculation.
it's like right now there's just a huge pile of money going into crypto because people are looking for a hedge to get out of
Right,
other
you've got
markets.
the complicating factor of Bitcoin's problems that
Well,
are
the China exchange is open, or are Chinese switching over and hedging on Ether?
I would imagine they
Oh,
are. I don't
it's-
know.
I mean, is there any info on geographically where the trades are happening?
So it won't be the largest exchange in China. They just open up trading for Ethereum.
If you're a high net worth individual or an institution that wants to pack money into crypto to hedge for an economic meltdown, if you're going to put in, say, 10 million or 100 million, you're looking for a market to swallow it up. You're going to, and if Bitcoin is broken, if it's going to shatter into two and there's unknowns about it, you hedge it, you spread it amongst other coins. And Ethereum's number two. It's always been number two, so it's the next most liquid market to put money into.
Right.
And so that's getting a lot of that benefit.
Yep, that sounds like a sound argument too.
And in most websites where I look for purchasing coins, like it's Bitcoin, Ethereum, so it's like, oh, that's the other one to go.
So
Right.
basically, it's ICOs and gamblers.
speculators.
hedge
I mean,
funds and investors.
I mean, Ethereum tells a cool story, and someday I'm sure that the world will run on smart contracts to a certain extent. So it makes sense that people. Well, you need speculators to fuel the first stage of any growth, right? It's kind of like angel investors in venture capital, right? Where it's just an idea, but you've got some people that believe in your idea and your ability to execute on it, but it's not really material yet.
And if you're an investor, an institution like a bank with a lot of money to put in, you probably wouldn't put it into Bitcoin because of the reputation of drugs. And a lot of banks are using, or they're saying they're going to use Ethereum for some of the infrastructure.
I was thinking about that. Do you think Ethereum has got a better reputation amongst the normal people because they gave that money back to people when things went wrong?
Yeah.
And it doesn't have the taint of drugs or dark market utilization.
There was an argument that if Vitalik didn't reverse the ledger, then it would have been illegal.
Or they would have been sued.
Yeah,
also
they had to do it. Or
right.
I can't remember the market regulations because it was centralized enough it could be attacked by the regulators.
Mm-hmm. So it's quite different from Bitcoin in that sense because there's a head of the snake when it comes to Ethereum, and that might make it more palatable. There's somebody to hold accountable when things go wrong. That might be palatable to the majority of normal people out in the world. Normal people might not appreciate the decentralized immutability of other coins. But
I have a question. I saw this Monaco Visa card, which would allow you to essentially, as an ICO on Ethereum, that would essentially allow you to use your Ethereum or Bitcoin as a Visa card.
And they made an ICO out of that?
The tokens are actually, the token sale that's going on right now, from what I understand. But it would allow you essentially to use this anywhere in the world for 1% charge, which would make it which would essentially turn Ethereum into.
So what was the role of the token in that?
I don't understand enough about it to really be able.
Because there are companies that do that today that will allow you to do like a prepaid Visa MasterCard. So you send Bitcoin to a certain address and then you've got $1,000 on your Visa card.
I think the deal is that it's being done at the current spot price of whatever that is against the currency of where you're using it. At least that seemed to be the big.
It's a rewards point. They tokenize rewards so that you're incentivized to spend using their card. So there's a few of them. It's a copy of another project. But we've got that for Bitcoin as well. We've got you can spend your Bitcoins on a debit card. They've been around for 2 years.
All right, guys, let's press on here. I was wondering, where do you think? Have you guys ever seen this graph? This is like a typical technology hype curve graph. And you've got the initialization of the technology. You've got a peak of inflated expectations, the trough of disillusionment, a slope of enlightenment, and then the plateau of productivity. And I was wondering if anyone would care to, place Bitcoin along this continuum. Do you think that Bitcoin is still on the front of that peak of inflated expectations?
Yes.
Yeah.
We do.
All crypto,
And okay, so you would place Bitcoin and Ethereum and others on the front of that curve.
We're quite early on, I reckon.
Yeah.
I think there's a whole load of inflated expectations yet to come.
So if this, do you think that this would equate to the price?
It's a great chat.
Do you think that this would correspond to the price?
Yes.
Yes.
So, yeah.
So does that mean that Bitcoin at $3,000 is going to be like, I don't know, $200 at some point?
Didn't we do that one already?
Well, I mean, we did. I mean, this kind of, this also follows or looks a little bit like each of the bubble cycles, right? Where it peaks and then it settles down a little bit higher than it was before.
That's when Bitcoin splits, maybe.
I don't know. anyway, this is an interesting way to think about that question.
I've got a question on that, and I'm not computer literate. So we got these altcoins, and Bitcoin, okay, when it came out, what have you, it was the all end all and everything else. Simply because it was the hardest one, I guess, to divert from. From my understanding, the sort of thing, there's a straight road. This was the blockchain and what have you. Now Ethereum comes along. What's the difference between programs or what they're using? Because to me, big money and governments will pour money into what they can control.
So governments and big companies are
Something that they can control. If they can't control it, they might have to get on board because that's where it's all going. But their first choice, to me, would be to get into something that they have some form of control.
So instead of trying to stop Bitcoin,
Just back a different.
Ethereum is backed by a lot of
I think
Wall Street.
I think you're right. Yeah, you're gonna you're not gonna put a bunch of money into something where you don't know how it's gonna come back to you, and
That's why I don't understand, and I don't. Between the Bitcoin and Ethereum, how much more control or do they have over the Ethereum program, or is there none? Is it the same as Bitcoin? I don't know.
Ethereum's more controllable, right? Because you got a kid, 20
somebody.
Vitalik.
you have the benevolent dictator in Vitalik Buterin, who in the past has interdicted the Ethereum blockchain and gone back and revised history for the benefit of certain parties.
Would it become even more controllable after proof of stake versus proof of work as well?
Well, I mean, that remains to be seen. I mean,
but if you had more,
if
you would have more of a vote, essentially, wouldn't you?
I tend to think that proof of stake turns Ethereum into a political decision-making entity, more like a board of directors in a company than
More
a
controlled,
decentralized. Yeah.
But this is a different type of control. We're talking a nation state trying to control something versus the community and the stakeholders.
Yeah, but isn't that's kind of the same thing? At least that shows that it's even clearer who's in control and who's able to control what's going on with Ethereum. Once you know that the stakeholders have a strong control over it, then governments can interject in some ways.
Like buy it out.
So if a nation state invested or changed, like such as Singapore might be doing or something like that, into more Ethereum, wouldn't they have a larger stake and then be able to have more control? So if in proof of stake, the more Ethereum you own, the more control you have. Is that
Pretty. It just depends. I think it really depends on how it's set up, right? Like at the end of the day, it's the core team that are developing the technology, and Ethereum doesn't have any kind of on-chain governance that says, let's vote on what we're going to build. All you're doing in proof of stake for Ethereum is to vote whether or not a transaction is valid.
Gotcha. It has nothing to do with the code or with anything else having to do with it.
The other thing is this in Casper, if you have minimum 17,000 or 16,000 ethers, then you vote, and maximum 60,000. So there's a cap on the number of votes you will cast, not beyond 60. So even if you had 100,000,
it wouldn't make a big
exactly. Besides, it's only 1% that's moving to proof of stake. 99% will be still proof of work. It's sort of hybrid system.
That's Casper. That's mainly proof of work.
It's 99 and 1%. It'll change over time, I guess.
Oh, okay.
Yes.
I have a question. So there's Ethereum is ETH. ETC is
Ethereum Classic.
Ethereum Classic.
Which was the result of Ethereum forking.
Its original recipe.
Right. So
it's tastier.
Yeah. Ethereum broke into two blockchains.
Okay.
Back when there was people had a difficult time making a decision on what the future of Ethereum was, and half the blockchain went supported the Ethereum Classic and half the blockchain supported the Ethereum itself.
What are your thoughts on Ethereum Classic versus Ethereum?
Well, it's interesting because I like Ethereum Classic's philosophy of not changing the blockchain. I mean, blockchain is supposed to be an immutable record, right?
Yeah.
And this is something that they remain true to.
Uh-huh.
But that's also the minority chain, right? It was less valuable as evaluated by the market, and also I think the smartest technologists also made a choice between the two chains, and probably I think it's safe to say that that actual Ethereum is where the majority of the brain power is to realize the Ethereum vision. So I think Ethereum Classic has a bit of a handicap when it comes to the development team, and also Ethereum itself has the economic majority or the most economic weight behind it. So, but I mean, Ethereum Classic still has value. It's still being developed, and it has a clean record with regard to remaining true to the blockchain. So
it seems like with Ethereum, that seems a little bit scary that they're actually able to go back and make changes, you know?
Yeah, it's kind of anathema to what a blockchain is all about.
Yeah.
A blockchain is supposed to be this disinterested third party that simply executes the code and doesn't care that Donald Trump showed up and said, no, we can't pay Jeet. We're not paying Jeet. The blockchain says, according to the rules, I have to pay Jeet. So
technically it wasn't a they.
It's a different application. I mean, Bitcoin is ultimately going to be a currency, while Ethereum is trying to be contracts.
It's trying to be
But is Ethereum just marketing itself?
It's a different thing. It's like, when the internet started, you had web browser was different than email. These are just different applications.
But also the contracts were supposed to be immutable. It's supposed to facilitate cross-border.
Don't believe the marketing.
Was it? Or did we assume it was?
I mean, if you didn't need that trust, you could just run it on Oracle and Apache, right? You wouldn't need a blockchain if you didn't need the trust or the immutable third party. So, Vanya.
Yeah, look, I just wanted to add, I haven't had anyone mention it yet, but what was a week and a half ago that, the news went out and said the central banks of Russia are going to change their rules to accommodate it at the same time as Putin's meeting.
Has met with Vitalik.
So to me...
Oh, no, Putin's there? Oh, God.
They're very
Trump's going to be world president? Shit.
They're kind of progressive government, I think, compared to some of the other governments around the world as far as moving forward. And they want to be an organic country, all these sort of things. They have these ideas. So when I look at this, there's two things that I see: is that central banks are here involved, and they're saying they're going to change their rules, and when they are involved, and they have an unlimited money supply, they can just buy. They cannot create like they do in their own system, but they can just come in. And so, a month ago or whenever Ripple crashed, I found that really interesting because I don't think anybody ever saw this whole big, huge thing just flatline. And if you go to the Ripple website, they completely are saying, we don't care about price. We actually want some sort of no volatility. We want, for doing transactions, we need this flatline.
Right.
So I look at what's happened with Bitcoin. Is there's people just jumping out of Bitcoin, going into Ethereum. But also the amount of market, I don't know if anyone's looked at it, but how much of Russia has started to buy Ethereum as opposed to the rest of the world. And whether or not the banks are involved in, just grabbing a lot of Ethereum right now, grabbing a lot of Ripple right now, because they're coins that they have some sort of control over. With Bitcoin, they don't really. So they've tried to bash Bitcoin for how many years, and now there's these things that are presenting themselves that are more able to be infiltrated. Well, I'm not saying that that's 100% the case, but as you said, Vitalik can change things, and if he has, then that means that Putin or whoever wants to push some power on him, and again, how does the world trust this? This is This is the dilemma that we're in. Anyway, I just wanted to say that, like, it was about a week and a half that the central banks of Russia have a look at it. I almost didn't want to share it with everyone because everyone's going to say, oh, you know, the banks are involved now. This is not what you have been saying it is all along. Anyone thoughts on that?
We're just tokenizing the ruble just like Singapore did.
Well, I think it's. I'll just make this point. If governments start getting involved in open source crypto or open ledgers, where they're buying on the open market, buying Ethereum, buying Bitcoin, then and it may very well be in their interest to do that, then it's going to be a bull run for all of these, for the technology and for all of the coins, because
when they get enough of it, then they can slam a lot of it on the sell board, put massive volumes in there and just keep that price down.
Well, but here this is why there might be a gold rush or a lot of money flowing into these areas, because if they determine, like Russia determines or the United States determines, that they need a certain amount of Bitcoin in order to affect the Bitcoin market, because they see Bitcoin playing a role of some sorts as a reserve currency between nations, or where nation states are using it to settle their balance of payments. They can't get it. They can't do like they do with their own currency and just print it. They have to buy it, and if they're buying it, then they have just as much ability to buy it as any of us.
It levels the playing field.
It is more of a level playing field. Yes, they can trade. They can print as much of their own fiat currency to buy it as much as they want. But if they do that, then they're going to drive the price of Bitcoin or Ethereum or anything else sky high, because they can't print Ethereum. They can't
I
print.
think that's why we're seeing this Ethereum rush. I mean, it's
because of that.
Well, this is why. I mean, I looked at it, and then it's just gone crazy. I mean, it's absolutely crazy. And so we're seeing this switch. So,
well, anything that happens in the world ultimately goes back to Vladimir Putin.
With Ethereum Classic, that's trading at $20 right now.
Yeah. Can we you've got to go, right?
Yeah.
All right.
We're almost.
Let's hold your questions and give.
Good to meet you in person finally.
Are you being paid to close out this?
No. Stephen needs to pump back Bancor wiping this.
No, but if you wanted to, if you don't.
All right, so we're take it away, Stephen. We're going to talk about Bancor, right? You were involved in.
Yeah. Did you have an intro that you were gonna do? I saw.
Yes, I got a little.
Bancor was named after a famous economic proposal made by Keynes at the end of World War II at the Bretton Woods Conference. He suggested a supranational currency that would help facilitate trade among nations. Keynes believed that using an international reserve currency could help protect smaller or deficit nations from constantly being in debt to stronger currencies.
Keynes's proposal actually inspired us to think if there was a way to utilize this concept with smart contracts to achieve the same objective of facilitating the ability for different currencies to trade with each other. Essentially, you can think of the Bancor protocol as a new standard for cryptocurrencies, one that enables any token to hold one or more additional tokens in reserve, essentially creating relationships between those tokens and allowing conversion between tokens and new kinds of economic models. With Bancor, conversion is done directly with a smart contract. So there's no need to be matched with another party, and anyone can always exchange their token to another. It allows currency that are hardly ever traded to the market price and liquidity. This is something not possible in today's exchanges.
Bancor works on smart contract blockchains and supports any standard token. These may represent fiat currencies like dollars and euros, cryptocurrencies like Bitcoin and Ether, tokens that were issued in crowd sales like Augur and Golem, tokens that represent assets like gold.
The way that Bancor tokens work is that you can buy them at any time by sending any one of the reserve currencies to the smart contract, which will then automatically issue you the token based on the reserve ratio. When you want to pull money out of the reserve, simply send the token back to the smart contract, thereby destroying that token and pulling out money from the reserve based on the ratio between the token and the reserve.
The algorithm calculates the conversion rate between the tokens while preserving a constant ratio between the reserves value and the Bitcoin token's market cap. This ensures that reserves are never drained out. Bancorp's network token will serve as kind of a connective tissue, linking all of the user-generated tokens to each other. The beauty of Bancorp is that the more people use it as their reserve currency, the more value it captures. It essentially encapsulates the network effect of every Bancorp-compatible token. Just like the internet enabled new types of content models like the blogosphere, we're really excited about enabling the long tail of user-generated currencies. We envision a world with even millions of tokens that are highly effective locally and yet tradable globally.
Because the Bancorp protocol is a building block for a new type of monetary system on blockchain, we're only beginning to discover the different use cases, from decentralized ETFs to community currencies, a new type of autonomous decentralized exchange. And we're really excited to hear what other ideas the community comes up with.
Please check out our white paper and smart contract available on our website at bancorp.network.
All right.
Okay, so
Yeah, that's that network.
I'm not officially with Bancorp, but for the last 3 months I've been involved in the white paper preparation and assisting a couple of colleagues that are official advisors to the platform. One of them is Bernard Leater, who's considered to be one of the co-architects of the euro currency, and Scott Morris from Ithacash, who's in our group as well too. And there've been a few others as well. As you know, that Tim Draper, the billionaire VC, just announced stepping in with probably a significant amount of money that went into the ICO last night. It's 140 million, not 300, from what I can see. Looking at the
yeah, well, I've seen a few figures, 140, 150, but that's only for half the tokens.
Right, and there was a decline for half the tokens.
Yeah.
They
retain 50% of the equity in the company
of those tokens though.
Yeah,
so they would get about, well, they actually have a much smaller percentage than half of the total funds raised in the crowd sale. They would be maybe 10 or 20%, something like that. But that breakdown was based on their fundraising target, which was 100 million tops, right? And they were going to try and shut the crowd sale down once they were within a certain range of their target being reached. But because of the network being stuffed up, like it was last night, if you were following it, my Ether wallet went down basically. Their website was taken down. They extended the crowd sale for another period of time so that people who were trying to get in could, because they've been trying to make it fair between whales and people with better network access and smaller investors, like a lot of people coming from the area that I work in, community currencies and stuff like that.
So this was an instance where the Ethereum platform was being used to issue this token, and there was so much demand that there was there were a few problems.
And a network attack too.
Right, so there was a DDoS attack happening at the same time.
So the idea is that in the beginning, the Bancorp network the tokens issued yesterday, BNT, are going to form the reserves of the initial smart contracts or the smart tokens that are issued through those smart contracts. But in the future, anyone with a token can purchase other tokens to use as their reserve. So it's kind of creating an ecosystem, and it's of reserves so that there's instant liquidity, but also there's not it's not only going to be on the Ethereum platform. That's the easiest smart contract platform to start off with. But they could do this for between other kinds of tokens that meet a kind of ERC20 or maybe in the future ERC23 standard or something like that, which is just like an interoperability agreement for coins, right? Like balances and transfers and so on.
Yeah. So let me see if I understand this correctly. Bancorp, at least initially, they're offering this Bancorp token on top of Ethereum, and Bancorp itself allows me to issue yet another token on the Bancorp platform.
That's right.
And I can do my own kind of fractional reserve thing where I like put up 1 Bitcoin, but I make 1 million Gary loyalty points, right?
You could.
And as long as I'm fulfilling the demand for Gary loyalty and people don't cash out of my system, then I never have to risk that Bitcoin. Now, the thing that I'm curious about is how do they keep that a run on my bank? How do they keep how do they keep people from cashing out of Gary loyalty points after I stop doing cool shit?
I'd like to see how that works in practice with the smart contract too. But the image that came to my mind is like a tractor pull. As your reserve starts to deplete, there's enough disincentive to prevent a full depletion of those tokens. It starts to cost more and more and more to disincentivize. Now they say that their formula completely prevents that from happening, like a total run on a coin from happening. But I haven't seen that in practice yet, right? Like I haven't seen that theory put to practice, and I think that's what we're waiting to see. You know how, because I'm really concerned about network attacks. Right? This is all all these platforms incentivize defense, right? So how is that going to work in an ecosystem like this? But what I find much more interesting is the ability for a lot of new tokens to be created on a platform like this and exchange freely with each other, which I think is like the purest expression of Austrian school economics, monetary economics. Right? Because the idea is that we could see how a Gary coin does, or a Steve coin, or,
right?
I would be a coin. Curious, is there a potential this could lead to another fork? What Benford did?
To another fork?
Yeah.
Well, there's some people who've said that there shouldn't be, they shouldn't have $140 million in one single contract on the Ethereum platform. I read that somewhere, and I was asking my friends as well too. So yeah,
that represents all the Bitcoin if it gains more than high.
Well,
the idea is that as other coins are created, those Bankcard tokens will be purchased to go into those other coins, and people will start creating other contracts. So ideally, this is hopefully the maximum size that we'll see in a single contract in Ethereum. The maximum value size we'll see. It'll decentralize out into other tokens as they come on. Like I know a number of developers developing for financial institutions to come into Bankcard. This is a great path of liquidity.
I came of age during the .com boom, and I was running around California, Silicon Valley, when these, like Pets.com raised all this money back in like 1998, and you would go to these offices and like there'd be a bunch of like surfer dudes like playing ping pong and stuff, and they'd like cater all the, they'd have like soda machines and that you could just push the button and the soda would come out. Like it was like these heady days, like money was flowing, and the run rates, the burn rates on these .com companies was just crazy, and obviously the .com bubble bursts. And I just have a thought experiment question. If you've got a startup and yesterday you had nothing and then today you've got $140 million, I mean, is that
thinking about your project? Right?
Is that optimal?
No. For the short term, yes.
In the short term for them, yes. Yeah. For the guys that did it, yeah, it's very optimal. I love it.
But it's different.
For the Tesla dealership too.
They're not selling an internet property like Pets.com, right? Like they're not. It's not just that. This is going into an economic function. So they will be judged by how much money they waste in development costs, right? The markets can judge them for misusing those kinds of funds in a way that Pets.com couldn't be, punished, except for people just selling them out, right? Selling out the thing. But we'll see, because estimates, like the predictions at Wings.ai and stuff predicted that this would only raise about $80 million and basically doubled that. But maybe that's because Tim Draper and a few other huge whales came into the project and was like, okay, there's just so much credibility. I mean, you have the architects of the euro coming in on a platform like this. So it maybe gained so much credibility that a lot of other people who are sitting on the sidelines jumped in all of a sudden, right, and dogpiled on top of it. So
and they accidentally raised too much.
Yeah, and maybe accidentally raised too much. And
you'll
see in 7 days. In 7 days, when it hits the market, and you'll see it on CoinMarketCap, that's when we'll know if too much was raised, because people will be selling it off en masse, right? And then we'll do that kind of chart like you did, and then we'll see if that's it. Or if actually a bunch of other providers are saying, no, we're a large company and we're going to be coming in, we're going to be putting our first business on the Bancor, right? And if we see a lot of those tokens coming into the ecosystem, which you can, yeah, who knows what they could be? Say Microsoft does, or Apple does, or some other big companies, then you'll know where those Bancor tokens are going to be going, and you can say, okay, actually there's actually much more demand or much more potential for this to go really huge than even the Ethereum platform can handle. So as I'm saying, that this could go into other platforms really quickly. It can become a standard for interchange between them. So it's not just about building up Ethereum or on that. They could develop broadly into much more platforms that allow many more companies to issue their own private currencies.
And Bancor itself is a company?
It's an organization. Yeah, I'm not sure how they're structured.
If say Ethereum dies, they can move that protocol onto another chain.
That's the idea, yeah. And of course, there has to be interoperability between those coins. Right?
Yeah.
So they would, even if they're on Bitcoin, if they're forks of Bitcoin, then they would have to meet sort of like an ERC20 standard.
No, I mean like say Ethereum dies, like say say it forks in shards, or I don't know. Say it dies and your smart contracts are being executed previously on the Ethereum virtual machine.
Yeah.
Are you toast, or
Yeah,
can
you're
you
toast.
migrate onto another like RSK? Like
How would you? Yeah, I don't know how that would work, but I think that if it depends. It could be like locked into that contract, just like that Quadriga CX matter. If they haven't been able to move it off in time, right, or migrate, but so that's what I mean.
Okay. Anybody have any questions about Bancor?
Did you just say that the people behind this are the same people who invented the euro?
One of the advisors, Bernard Leiter.
That's hardly a recommendation.
Well, the original design of the euro is very different than how it was, how it's occurred over there, what's happened to it over the last 10 years, with Germany basically taking control. Originally, all the countries in Europe were supposed to have equal access to creation of money within the eurozone, and they were supposed to be a Bancor-type protocol developed by John Maynard Keynes to manage currency reserves in between them. But of course, central bankers of the old order got in the way of that. So it's the euro and the issuance of euro that we have now is totally different than how it was theorized in the time of the European Common Unit.
There are people who are saying that it was flawed from the beginning.
Possibly as well too. Yeah, you're dealing with countries in Europe that tend to have difficulty working together on these kinds of things.
Tensions were there, but
we have that as well here with us sitting around this table.
Which is exactly why someone might turn to a blockchain. I mean, I feel like blockchains are, in a way, it's like protecting us against ourselves. We're trying to preserve in the amber the angels of our better nature, right?
Yeah.
Let's codify the fairness within the system and not tempt ourselves to cut corners or do something expeditious in the short term, because then you end up bastardizing the original vision. And I would love to talk with some of those architects and see if they think that blockchain could solve some of those problems, some of the people problems.
Well, I posted in the group before Bernard Leiter's Bitcoin Wednesday talk. Now it's a bit pedantic and a bit long, but he's he talks once he covers sort of the general monetary theory ideas, then he goes into Bancor after that. He's a really big fan. We met with him in Amsterdam the day after that, and
It's a realization
come a long
we
way.
originally wanted.
Sorry?
Is it closer to a realization we originally wanted in Europe?
Yeah, absolutely. And with the concept of Bancor, as Keynes had proposed it as well too, which is in line with Austrian monetary theory as well too. Hayek and
Right.
Free competition between currencies is the ideal monetary state, for existing currencies to be in, and free creation of currencies, right? The currencies shouldn't only be controlled by governments. They should be. Governments can have currencies if they want, but so can people. So can us. We can all create our own as well too.
Right. Fascinating. All right, guys. Well, we are just about out of time. Any final questions for Stephen? We're really lucky to have Stephen with us. I mean, he's been doing he's been doing work with currencies before Bitcoin was even an idea. 20 years or something like that, right? So anyway, thanks for that update.
Still lots more to go.
And that's going to do it for tonight. We're just about out of time, guys.
Just one question. Just one question. I don't know. It's probably a really stupid question. Where do I invest in the bank, or how does this work?
In a week, it'll go on the exchanges in a week. Right now, like they just finished the crowd sale at 1 a.m. last night, so then they'll be sending out people's BNT, their network tokens, to their Ethereum addresses, which is gonna do all sorts.
Which exchanges do you know?
I don't know which ones will pick it up first, but it'll be on CoinMarketCap and then see what it does, and then I suppose the usual Bittrex usually picks up coins first, I believe. What do you think? Who's usually the first to pick up new tokens?
Bittrex usually picks up the good ones. Solanium, dodgy, check it on whether they pick it up or not.
Right, absolutely.
All right, guys. We're out of time, but we are going to pick up the conversation at Kismet. I've reserved that horseshoe table right on the main floor, so we're going to continue the conversation over at Kismet.
When now?
We're gonna go right now. So let's continue the conversation there together. But in case you can't join us, don't forget we've got the Facebook group, Bitcoins in Bali Facebook group. If you're not already a member, make sure you take a look. We do this every Tuesday night at 5 p.m. at Hubud.org. They're kind enough to give us this air-conditioned space every week. If you find yourself in Bali, come see us at Ubud. There's the Facebook group. We also have a Telegram group where the conversation continues, and this is where people participate offline when they're not in the room with us. We've got a YouTube channel. These things go right up on YouTube directly after we're finished. So if you're ever not with us in person, please like and subscribe to the YouTube channel. We're trying to get the word out on what we're up to here. And last but not least, you can check out bitcoinsinbali.org. That'll do it for tonight, guys. See you next week, same time, same channel. Yeah, it's a little bit of an experiment.